Good morning, ladies and gentlemen. So here is a quick video to break down everything you need to know about the day. So futures, they are slipping ahead of retail earnings, and that's only because of Home Depot getting ready to declare its earnings at the open. Why is it important that Home Depot do well with their earnings? Because it's going to tell us exactly where the retailer is. What is consumers' behavior? How are they translating what's going on with regards to tariffs? Now, the word on the street is that investors are sort of somewhat concerned about what the story is with the nation's biggest retailers. And the reason being is because the data that's been coming out. Let me draw your attention. Last week, preliminary consumer sentiment came in at 58.6, showing signs of contraction. On top of that, they're expecting that inflation is going to be up in the future. Given that retail sales came in lower on Friday and core retail sales came in line with expectations, but actually lower from the last reading, the thing that we got to pay attention to is the fact that the Empire Manufacturing Index has come in higher, and it's only coming higher because it appears that manufacturing companies are positioning themselves for the impact on tariffs. Speaking of tariffs, the idea that interest rates are going to get cut very soon is what the market is expecting. Swap traders are looking for a cut this September with an 83.1% chance of that happening, but that was at a high of last week of 94.2%. Now it's starting to come down, which means that if we get any data this week that could compromise the idea of a rate cut, even though the market does look like it's already priced it in. You can see the NASDAQ is making a nice move to the upside in regards to the futures markets. Going over to the stock market itself, you can see that even though volume is below average, they're still holding on to their gains, but a pullback would be something that needs to happen. You've got the relative strength reading right here showing it's going pretty flat. And if it's flat and volume's not present, then that does set up the market for potential pullbacks. So that's something you've got to take into consideration. Now, the bigger picture of things is investors are trying to anticipate where the market is going to lead up to. The two main concepts are this story with Ukraine and Russia, and of course, the interest rates. What I like to do is I like to go over and have a look at where the ETFs are, given that there is $7 trillion trapped up in that ETF market. And it's only because investors want to diversify their exposure. If there is consistency in the marketplace and they do believe that the markets are trending in the right direction for the right reasons, that money will come out of the money markets and start going into higher risk assets. So you can see here that we've got quite a bit of interest coming into play with the VU. Of course, the Vanguard SPF ETF is always going to be trending higher. But as I look at the top 30-day net inflows on ETFs, I'm starting to see a little bit of a mixture here. Of course, the two top players are the iShares Core S&P 500 ETF and the Vanguard. They will always be at the top side of things. Now we're starting to see the bond ETF, and we're starting to see shorter term bond treasury ETFs starting to come into action. And then, of course, as we go down, we do see the Ethereum Trust, and we're now starting to see gold. So gold ETF is starting to see a little bit of inflow coming into it all. Now, on top of that, you've got the iShares US Equity Factor Rotation active. Now, this is an important ETF itself. We go into it. It's going to break down exactly what this is made up of. And this tells you exactly where money is starting to move from certain asset classes. Going into holdings, you can see that you've got Nvidia, Microsoft, Apple, Amazon, pretty much all the top boys. Then it's mixed up with a little bit of JP Morgan, Berkshire Hathaway, and Broadcom. Now, what you've got to understand is the actual holding sector itself. It's made up primarily of information tech, financials, communication, healthcare, staples, real estate, utilities, energy. So it is a broad overview of stocks in this ETF. And this is why investors are going into this right now, because it's rotation. So what you can appreciate is the stock market has been moving up on the back of tech. And this is the NASDAQ composite. And that's where most of money has been going right now. And we know that because the yields themselves have been taking a little bit of a smack, but they're starting to trend upwards. And if yields are going up, it means investors' expectations of interest rates is that it's going to be higher for longer. Paying close attention to the 10-year yield itself, that's now trading above 4.32%. It is trading negative for the day, but that's only because investors are trying to speculate on where we are with regards to retailers and, of course, the Ukraine story itself. Now, as long as we do see the yields moving up, that's going to have an impact on the stock market overall, which can equally mean that cryptocurrency is going to suffer, Ethereum's going to start coming back down, but more importantly, is the rotation going to happen in the Forex market? What do I mean by that? Well, what we got to be mindful of is if the euro starts to trend higher, gold starts to trend higher, and the dollar starts to trend lower, it means that investors are starting to come away from dollar risk but going into safe havens against the US dollar. That equally means that the yen is going to start trending positive as well. And if the yen trades positive, the euro trades positive, we can expect that gold's going to trade positive. It means that investors are going to start going into safe havens because they are deemed as safe havens. Now, if no one is showing an interest in the 10-year bond market itself, given that the bonds are trading 0.06% positive for the day, then how are you going to understand if big money is going to go into cryptocurrency? This is a $140 trillion market cap in terms of the US bonds. Naturally, you're going to want to pay attention to investors' expectations of the future, because if they think that the interest rates are going to be higher for longer, well, they're certainly not going to be putting themselves in riskier asset classes like the NASDAQ. Quickly having a look at cryptocurrency. So the big boy, Mr. Bitcoin, is starting to pull back, and it's tested the 50 EMA once. Now it's coming in for a second attempt right here. Now, of course, if we do get any negative news from Home Depot, that is naturally going to have an impact on the US stock market, and we'll probably see consolidation coming into play, given that the article here does talk about the fact that the yields are going or somewhat steady. If the yields start to mark up, then that's going to have an impact on Bitcoin. But when we go and have a look at some metrics on Bitcoin, you can see that the ETF balance is still at 749,944. We got the Arkham showing that there is a little bit of a rotation happening with BlackRock. I mean, BlackRock has been busy rotating a little bit of Bitcoin. Now, that could be for other reasons. It could be investors wanting to sell. Who knows? But ultimately, we're seeing movement happening in the ETF, and the balance seems to have topped out over here. Equally, miners aren't really doing that much selling right now. As you can see down here, that yesterday's activity with Bitcoin's price coming down, they're not really selling too much. Going into the Coinbase Premium Index, which does show us if US investors are buying and selling Bitcoin, when it's green, it usually tells you that investors are buying. But what you want to pay attention to is when it's red, because when it's red, that's where US retail traders are selling. But who are they selling to? Well, they're selling to these dudes over here. This is the coin and order flow chart. You can see here that Ethereum, someone bought $11 million worth of Ethereum at 4,203 yesterday, okay? And then over here with Bitcoin, you can see someone bought $17 million worth of Bitcoin at 114,500. Correlate the order flow principle and go back over into this chart right here. You can clearly see where the buying and the selling is. If you're buying when it's green, then you're going to be part of the people that are going to be so optimistic because the Coinbase Premium Index shows that investors are buying, retail investors. Pay attention to when it's red, because if you were paying attention to the greens over here, you would have been getting smacked. But if you were paying attention to the reds, you would be positioning yourself to build yourself some longs and anticipate that Bitcoin was getting ready to move to the upside. Equally, when retail traders are selling, the big boys are buying from them, okay? So you can appreciate when it's negative, that's when you pay attention. Right now, we're still seeing it in green. So the logic says that we would expect retail traders to be holding onto positions and thinking, oh my God, is Bitcoin going to continue higher? Or we're going to be witnessing price coming down, squeezing those retail traders, and then preparing price for the big boys to start stepping in and buying Bitcoin dips. Going over into the high block to understand where we are with liquidations, you can see we got quite a significant amount of liquidations at the one point, about 113,412, with around $1 billion worth of long liquidations coming into play. Now, there is news saying that Bitcoin could be pulling back to around 110,000. Taking that logic and going over into the chart of Bitcoin, we can see that that's going to put us in a very tricky situation, given that we do have some green vector candle recovery points right here. Now, what you got to be mindful of, guys, is if Bitcoin is on the trajectory to move to the downside, then there are trading opportunities that you can take advantage of. Let's just look at this from yesterday's platinum setups that are provided in the morning for the members. The idea was that after Bitcoin had made the drop to the downside, we were anticipating that Bitcoin was going to create the Brinks box inside of this range to then effectively make a reversal back up. Now, it works on the following logic. If you look at the bid and the offers of Bitcoin, you can see in this chart right here that they were marking price down, okay? So it was making reference to this range right here. Now, you can see that they had marked prices lower, they made the move up. But what was going on was there was an influx of bids coming into play. These are people that are buying Bitcoin as it drops. Now, because of the expectation of Bitcoin's price is looking like it's going to come to the downside, the same guys that were bidding Bitcoin lower were effectively getting themselves ready to start buying or selling the Bitcoin as it moved up. So that's something that you've got to take into consideration. If we are in a drop to the downside, investors are going to start positioning themselves for prices to drop, to then retrace, sell the rallies, and then come back down, sell the rallies, come back down, until they then prepare themselves for price to buy the dips and then run price to the upside, buy the dips, run price to the upside, to then come back into this red vector candle region over here. And that's exactly what we did yesterday. So we saw the move to the downside on Bitcoin, and then we initiated some reversal points right here from the brinks to then trade up towards, as much as we wanted, was the 117,472. And we go over to Bitcoin's price action on that day that they did that, which was on Monday. And you can see over here that from that, we got the reversal from this range. So we did see Bitcoin make the move all the way up towards, even in the Asian session, at 116,695, but we didn't quite get the target profit that we wanted, which was 117,000. But the first TP got taken from these absolute lows right here, and then they cleared out the 116,447 to effectively take out the day's high in the NASDAQ session, which was 116,808, roughly there or thereabouts. With that being said, today we don't really have anything to be too concerned about in terms of Trump. We do have Caroline Leavitt speaking today at 1 p.m. Eastern Standard. And then, of course, Mr. Donald Trump is going to be signing a congressional bill. Other than that, the day itself is going to be pretty quiet in terms of news announcements, but just make sure that you are mindful of how Bitcoin is going to behave as we head into the New York session. Home Depot are going to be declaring their earnings, and if they do give the market the idea that retailers are going to be struggling, the stock market might not like the idea of that. With that being said, ladies and gentlemen, make sure you hit the like and subscribe button. We'll be getting back to those lives very soon, guys, so don't worry about it. I have missed you all. I just want to get back and do my thing and start shouting at you all. Mad love and respect, guys. Take care of yourselves, and I'll tune into you soon. Peace.